Dear friends of regulatory clarity, today we'll talk about the SEC legalizing crypto. The SEC has officially dropped its case against Ethereum 2.0, identifying Ethereum as a non-security. And this comes as a huge relief to blockchain companies, especially to those related to Ethereum-based services, as they fear charges for registered and unregistered security offerings. Now, it's important to understand why the SEC has dropped its case. And there are a couple of main reasons. First one is widespread distribution. Second one is trading on Ether. And the third one is market forces dictating profitability. However, while this seems like a success so far, it could still be the case that under the Howey Test, Ethereum clarifies as a security. However, more to that later on. First, let's dive a bit deeper into the reasons to understand them. First is widespread distribution. Ethereum has a large number of holders, consisting of private investors, developers, and public institutions. And this means Ethereum is not reliant on the efforts of a central authority. On the other side, Ethereum is also extensively traded, which basically means it's listed on a huge number of cryptocurrency exchanges. And it's also important to understand that while this shows their market-driven nature, that driving factors regarding price are demand and supply, more than efforts or promises of a central authority. And the third one is decentralization. The decentralization aspect is very interesting. Also, for the decentralization regarding Ethereum, it basically means that Ethereum cannot be controlled, or a party cannot have control over the Ethereum network or its operations. And in general, in a decentralized system, decision-making and governance are actually distributed among nodes and participants, rather than in a centralized system. And this also reduces, for example, the likelihood of expecting the profits from the efforts of others, which is, by the way, a key principle of the Howey Test that clarifies basically securities by law. In general, when applying the Howey Test, it's actually noticeable that Ethereum satisfies two of the three key principles. The first one is the investment of money. The investment of money basically means that investors invest in Ethereum with the potential idea of making profits. The second one that is also satisfied is the profits from the efforts of others. And this basically means that in the case of Ethereum, profits can be generated by the efforts of others, in this case by miners and developers, as those are the ones that maintain and improve the blockchain. And with improving the blockchain, they increase the utility and functionality, and therefore they increase the potential value and profits of Ethereum tokens. However, the third principle that is still very questionable is the common enterprise. As while users may pool resources from the participating in the Ethereum network, it's still very questionable if Ethereum can really be considered a common enterprise, as common enterprises are typically centralized or basically investment schemes, which of course Ethereum is clearly not. So there's still room for interpretation. And while there's still room for interpretation, it's safe to say that the current investigations have been a success so far. And this can have a huge impact and effects on the market. As first, it provides more regulatory clarity. This is especially important for developers and innovators, as those are the ones that really progress this technology. And while there's still a lot of legal questions, at least they're starting more and more to get solved. It also boosts the investors' confidence, as while not only for the case of Ethereum, in general it was always Bitcoin. Bitcoin was safe from the start of the SEC because the SEC basically declared Ethereum as a commodity and therefore it was safe. However, with Ethereum winning this case, this is a huge step, and it also means that combined with the Ethereum ETF approvals, that ETFs that are listed on the New York Stock Exchange, the CBOE, and also the NASDAQ, it can mean that more institutional investments are also coming in. And in general, investors who were still a bit unsure about the legal side of crypto, they might be coming in more and more. It also was a huge relief for blockchain companies, like I mentioned before, especially to those related to Ethereum, as it was kind of scary for them. Because if Ethereum would have lost the case and would be clarified as a security, they would have been the next targets. However, this will not happen. In general, also, it improves the whole standing of the crypto market, not just Ethereum. As while Bitcoin was always safe legally, It's also showcasing that companies like Ethereum are also safe. And this is a general good sign for the crypto market, as it shows more reliability and compliance to the law. So what does this mean for the future? Well, there are still a lot of questions. However, there seems to be more regulatory clarity. And while this is just one step, I think it's a really necessary step, as Ethereum is the second largest cryptocurrency by market cap. And this is very good and very important for the crypto market, as it can attract more investors also from outside. As while the ETF has been approved and they also are compliant with the current law, this is a very good sign for the crypto market. It can bring a lot more institutional investors, in general people who are still a bit unsure, as in the general mind, cryptocurrencies still have like this kind of like scam image. Also, in general, the investors' confidence will be boosted, like I just mentioned. There will be more and more people coming into the market, especially with more ETFs being approved. The ETFs, it's a lot easier to invest, as they don't have to set up any wallet or so kind. They can just directly invest in the ETF, which is of course great for newcomers. And in general, I think it's very interesting that while it's just a small step, they seem to be more and more coming together. As first, Bitcoin has been approved, the ETF. Now Ethereum has been approved, and there might be some potential ETFs that can be approved. However, we'll have to see in the future. What is also very interesting, and while this means more mass adoption, I also recently made a video on why mass adoption can actually harm crypto. You can see this video down below. However, let me know what you think. Do you think that the SEC dropping this case is actually a major step, or do you think they're still not done and they will actually try to classify it as a security by the Howey test, even though with the decentralization aspect, it's very questionable if Ethereum can be considered a common enterprise? Let me know. I personally think that the SEC is not done yet, and while I think they may drop this case, I think they will continue. But let me know your opinion. I will see you in the next video.